spoke about an acquisition. Now we're talking about stake sale by founders. EaseMyTrip is in focus, and there are reports indicating that a 14% stake sale by co-founder Nishant Pitti is on the cards. The stock is down almost 5.5% in trade. Mahima, my colleague, joins in. But before she joins in as well, let us also wish her a happy birthday. It's the last day of the year and her birthday as well. So Mahima, firstly, happy birthday. And secondly, what does this stake sale now actually entail?
Right. Thank you so much, Hiral. And talking about the stake sale for EaseMyTrip, well, as you rightly mentioned, it's a remaining 14% stake of Nishant Pitti in the company. The floor price of the deal, as per Bloomberg sources, is around 15.6 per share. Now, in terms of how the promoter, that is Nishant Pitti, has offloaded his stake in the company. When the company was listed in March 21, the stake was 37.26%. Then as of March 23, it went down to 32.3%. As of June 23, it went down to 28.7%. June 24, it went down to around 28.1%. And as of 2nd December, it stood at around 14.21%, which now sources suggest will be completely offloaded by Nishant Pitti. In terms of, how company is, performing, in the first half of FY25, it has done some major acquisitions, as well as it has signed some agreements. In terms of recent developments, it did enter a pact with BNZ Green, and this is to promote eco-friendly travel, and this will integrate BNZ Green's APIs into company's booking platform. In terms of acquisitions, a 49% stake in Planet Education was done at 39 crores, and a 50% stake in Jeevani Hospitality was done for 100 crores. And lastly, it has also incorporated an arm, which is Easy Green Mobility. So all of these things combined together were the recent developments for the company, but the stock is seeing significant pressure in trade today on the back of news, as per Bloomberg sources, that Nishant Pitti might sell his entire stake in the company.
Right. So Nishant Pitti will be completely exiting EaseMyTrip, and this is going to be an interesting development to watch out for. Raghavendra, how are you looking at EaseMyTrip, taking into consideration the competition as well?
Well, the market share has been pretty steady in terms of EaseMyTrip for the overall booking business. But this development where the founder, promoter of the company has been selling their stake, and currently this current sell-off, stake sale, there will be a total exit from this business. So that's a concern to us in terms of skin in the game part, where the promoter has been diluting their business on a very regular pace. So we would avoid EaseMyTrip at current levels. We believe that the acquisitions which also the EaseMyTrip has done in the last 1 year has been broadly on the non-core business side, where they have actually been from a platform-based business into these acquisitions, where there has been some kind of inorganic growth, but the business verticals have very little to no synchronization with their core business. So that's also a concern. So broadly, with this stake sale, this non-core acquisitions, and founder-promoter getting total exit from the business, we would avoid EaseMyTrip at current levels. At current price of 16, it's an avoid.